Today, it's all over, full stop. Hello again, it's Martin North from Digital Finance Analytics, one that is post covering finance and property news. It's Tarric's time. Tarric's back. Hello, Tarric. Great to see you again.
Great to see you too, mate. It's great to be back.
Yeah, a fair few weeks gone under the bridge, but a lot of stuff has gone under the bridge, and not necessarily good stuff either.
Well, no, there's been quite a lot. You know, there's been the trade war roller coaster, and well, the Aussie unemployment data surprising to the upside or to the downside, depending on how you want to look at it. And well, God knows what else. It's been a very big couple of months, I must say.
Absolutely. And to me, one of the little nuggets which the ABS released yesterday was the fact that they are going to not release certain data this year because their surveys are crap, which for me is quite interesting and for me, a very relevant data point.
Oh, 100%, mate. And I think the thing is that this isn't the first time that this has happened either. There are plenty of data sets where you look on the ABS website and you go, this data set is fantastic. I really want to see what's going on now. I want to go see what's going on since COVID. But then you look at it and you look at the next release date and it just says unknown. Like a great example of this is the ABS Household Expenditure Survey, which I'm a very big fan of. They've been running it since 1984. And it reveals some very interesting things because it basically tells you how households are spending their money, how households are saving their money. So it gives you a very good granular look by age demographic and by a bunch of other different demographics on what households are actually spending their money on. And this is something I referenced recently, but it shows the fact that Australians are spending dramatically more in the 2010s on housing than they were back in the 80s or the 1990s. Yet that survey has the last update to that survey was over 8 years ago, and the survey window for that, so that the actual time that was assessed was almost 10 years ago. So we're flying blind on so many of these data points that are just absolutely excellent and vital to understanding what's going on at a household level. But if you look at things at a household level, they're not pretty. So I'm not sure if there are some people out there who want to know what
Well, I
things
just
look like.
I wonder about that, Tarek. Certainly, my surveys continue to show very high levels of indebtedness, and a higher proportion of net disposable income going on housing, be it a rental payment or be it a mortgage payment, than we've seen. It's not uniform, of course. There are some doing it well, but the problem I've got is the compass is broken. And people around the world are saying the statistical agencies are having issues with people not responding to surveys. But the Australian version of this looks particularly serious to me, and especially, of course, when we know that the CPI metrics are pretty stuffed anyway, and we know that the unemployment statistics are pretty stuffed anyway. It means that we actually don't know where we are, and the granular bottom-up experience of households is actually not being translated into the top line data that people are talking about, the economists are talking about, or even the RBA is talking about.
I think that it leaves us in a very challenging position here in Australia because we don't have a lot of the data points that they have in, say, the US, for example. Like we don't have continuing jobless claims in the same way that the US does. We don't have initial jobless claims, which is basically people then going to the government and applying for unemployment benefits. Because, well, we do have data to a degree, but our data is very distorted by the fact that there's a bunch of different means tests and hoops you've got to jump through in order to qualify. So it lacks the same statistical potency, shall we say, of some of the US data. So we're very much just flying around blind. And to be completely fair to the ABS, they don't have the resources that they need to pursue data collection the way that they used to. And a bunch of different already, a bunch of different data series have been discontinued already. And it's really disappointing to look for like an indicator on how households are faring over time, only to find that data was discontinued 5 years ago or 10 years ago. And then you're just left with this gap. And I think it's very important for us to be able to compare things over time, because you need actual apples with apples data comparisons to be able to say things are getting better or things are getting worse. But if things aren't getting better, then those those data points tend to reveal things that are uncomfortable for society and in particular for governments.
Yeah, and just building on that, of course, the Reserve Bank claims to have this wonderful database of household mortgage statistics, except, of course, that it's linked very much to the mortgage-backed securities part of the mortgage lending book, which is not statistically that reliable because it doesn't capture all mortgages. And we also are very reliant on a lot of the information that the banks produce through their economics departments. But again, that is all filtered. So we end up with this sort of alternative version of reality as portrayed in the data relative to what's actually happening on the ground. And there is actually very little good information about what is going on the ground. We have my surveys, we have the Roy Morgan surveys, and that's about it. So unfortunately, if you look at the Roy Morgan analysis of, say, unemployment, they have a very different story to tell from the official one.
Well, it's interesting because there is the Combank IQ data on household spending by age demographic, and they were kind enough to share the latest update with me relatively recently. And it shows that if you break down all the various different age demographics into per capita terms, spending is contracting for every single age demographic under the age of 65. So what we've seen over time is as time has passed, the number of age demographics where spending is actually growing has got smaller and smaller and smaller and smaller, and the average age of where the demographics where spending is growing has gotten older and older and older and older, to now where the average growth, the start of growth is technically a retiree.
Mm.
So, the average Australian is going backwards, and it's very, very disappointing, I think, to see a lot of this data that's put out by academia, that's put out by the ABS, that doesn't show how tough people are doing it. And I don't understand why that is, but it is. And I mean, another example just of the sort of, how would you put it, the somewhat dodgy approach to data is and one of my favorites is the one from Housing Australia, when they talk about mortgage arrears. Now, if you go to the Commonwealth Bank or Westpac or any of the other big banks, they say, well, mortgage arrears are about 1%. Somewhere in that sort of ballpark, maybe a little bit lower, maybe a bit higher. Now, if you ask Housing Australia, what is your rate of arrears? And they say 0.01% or zero point 0.1. No, it was 0.01%. And that's because they don't count loans that are in hardship as in arrears. And well, that's just nuts, isn't it? You can basically just say, well, yeah, I'm having a bit of a rough time, so yeah, ergo the loan's not in arrears, and it doesn't really make any statistical sense to me. It's just like saying, oh well, this particular thing is being driven by this bad event, and because there's a bad event, we're not going to count it. So it just doesn't really make any sense.
No, it doesn't. And of course, the banks have their own internal schemes where they help to restructure loans and extend the term, move people onto interest only terms, for example. And those are not then actually shown as loans in arrears. So, yeah, you have to question whether the statistical data that is actually used for that is actually real. It's interesting that the delinquencies were actually up, if you look at some of the other agencies. But again, they're looking at the mortgage-backed security pools, and those are hand-picked mortgages. They are not statistically representative of the total mortgage book, and yet they're the ones that everybody grasps that. So yeah, we have a data problem, Houston.
Yeah, we do, and I think that the thing that's sad to me is that there's no appetite to fix it. I mean, like, you look at the economics community, and everyone's like, "Well, we need more data. We need harder data that's concrete, that's better. And instead, we just, we're like people talk about the Fed and the RBA driving around, basically, trying to drive a car backwards through the with using the rearview mirror. But if you think about it from a sort of more social perspective, not from a broader economy perspective, but just from an individual person or individual household perspective, the data that we like just for example, like the data release that was postponed by the ABS, which is the survey of income and housing. That data now isn't going to be updated until the middle of 2027, and that data will be for the survey is actually out currently, so for 2025. So we're going to be waiting years and years to find out how things were for households right now. Yet that should be one of the most important indicators for the health of an economy and the health of a society. But instead, it's just kicked down the road because well, I'll leave you viewers to figure out why that's happened.
Right. And just add to that the Hilda data, which, of course, again, is the one that the Reserve Bank uses, right, which is the Melbourne Institute stuff. But that is 3 years old as well.
Yeah, and sometimes I look at the Hilda data and I wonder exactly how some of these conclusions have been arrived at. And there's certain trends that don't quite add up to me. That they just like they just don't seem to make sense. And I don't understand why that is. I don't know if it's just like a statistical anomaly or what. Yeah, I mean, I realize that this is a relatively challenging thing to do, and especially when you're talking about something like these sorts of things. And I wonder sometimes that if we're just reaching a point where these sorts of data points are getting harder and harder because people are being less truthful, not only with the people collecting the data, but in some ways with themselves, because it's hard to say to someone, especially if it's one of these more in-person interviews, that you aren't where you need to be in your life, especially when it's something that's so simple as, say, having a roof over your own head that's yours. And I mean, that's something that I covered recently on burnout-economics.com, with just the fact that, people say, well, the home ownership rate is X. Yes, but the home ownership rate is calculated based on the number of households have their own household. It's not calculated on all these people who are sharing houses in their 30s, in their 40s, or they still live at home with mum and dad. Those people don't count. So it reveals a very, very different set of statistics, and a much, much less healthy one. And basically what I found is that in the 25 to 34 age group, there are over 300,000 households compared with peak household formation that have never been able to exist. And I think that's probably one of the most alarming conclusions of all. And I think the more concerning thing, even more than that, is the fact that it's just us talking about that, when it should be our whole society. Well, we wonder, well, why aren't people having children? Well, it's pretty hard to have kids when when you're not unable to form your own household.
Absolutely. Household formation statistics are, shot. Very little good information about it. And as you say, if you look at multi-occupancy households, which is going up a lot at the moment, if you look at people who actually went off, tried to get their own house, and then have come back into the parent fold later in life, that's happening. And of course, the other factor, which I come back to, if you look at some older households, they actually have people who are still hangers-on in their households, but they've also got the mortgages as well. So in fact, this is hitting all the generations, and it's changing fundamentally the definition, I think, of what it means to be an Australian household. And that is a problem because it's not the same way as it's measured in any of the statistics.
No, exactly. And I mean, I think that one of the funny things about all this stuff is that even if you look at, say median household income, for example, median household income is being tossed to and fro by the changes in households, because it's moving. Like for example, as well, because you're seeing this huge rise in the relative incomes of older households, and you're also seeing the average age of households rising, which should, in theory, even just in a vacuum by itself, raise the level of income because people are further into their careers at the median. And there's all these different factors that should be influencing median household income higher. But once you actually strip out some of the impacts, some of the factors of like increased workforce participation rates at older ages for households, so they're further along in their careers. Once you factor all those things in, and you begin to sort of even just build the most basic statistical model of it, it reveals that things are not going well at all. And for a lot of people, they're not really going anywhere fast.
Absolutely. Well, yeah, and of course that has social consequences, economic consequences, and I even look at things like crime statistics, which are going up in some parts of the country at the moment as well. And there's a high correlation between financial stress, social ills, and crime. All those things follow on. So, in other words, we are laying a foundation here for a very, very sick society into the future in its broadest sense. But the politicians don't seem to be particularly worried about it, which worries me greatly.
I'm not gonna lie, it's really quite strange because I think about some of the societies that are succeeding. I think about the Singapores of this world, even to a lesser extent, Poland, which is, kicked on enormously over the last decade in particular. But I think about like, the Singaporean approach to crime, to disorder. Now, don't get me wrong, some of it can be a bit heavy-handed, but generally speaking, it works. And I look at Western society and I see, you see these videos coming out of Britain or Canada or Australia of people, getting away with murder, getting not literal murder, but getting away with, these various crimes. And you read the stories every other day, and we're not we're not taking the steps that we need to take, or even attempting to take these steps to fix our society, to rebuild the nucleus of our society in such a way that it's sustainable, that we have these more rewarding pathways that we need to really solidify our society and to really include as many people as humanly possible. There's always going to be people who don't want to participate, who want to follow the wrong path, and that's just life. But I think that we need to be able to just build it as best we can for the rest of us who do want to be part of a society. And I think it's just sad that there's no real effort made to even try to fix that.
No, of course. The question is of priorities. What are the top priorities? The answer is 370 billion for AUKUS is a top priority, right? And I'm thinking, well, just how much we could redirect some of that into some areas where it would make a huge difference to the definition and future of the society. But no, we have to spend it with from Australia to the US without any guarantee of, well, any subs at any time.
I think that money and funding is definitely a part of the broader picture, but I think it's also just about stated priorities as well, and just hammering home what they're meant to be all about at any given time. And yes, obviously, directing money to the various different new policies and stuff like that would be part of it. But I think it's also just about getting up and saying what matters to Australia. Like we want a cohesive, get a government up there, state, federal, whatever. That we want a cohesive society. We want a society that focuses on ensuring people's basic needs over, say, speculating on housing, for example.
Oh,
We want, yeah, well, live grenade right there. Although to be completely fair, that's pretty much what they said in New Zealand the other day.
yes.
And I mean, to be completely fair, New Zealand didn't spontaneously burst into flames and Armageddon, some apocalyptic revolution. And well, I guess we'll see how it goes.
Well, New Zealand prices are down, 16, 18%, and migration's down. The economy is, pulling through its recession, and interest rates in New Zealand are lower than they were, significantly lower than they were. So it just, interesting. It goes back to priorities, I guess, and what's really important. But I have to say, I do think that the political arguments in Australia have absolutely lost the plot, and we're still talking about, social media controls and things like that, and limiting free speech more and all those sorts of things, as though they are the most critical priorities. And yet there are some really, really important issues: household formation, we've touched on, costs of housing, which are critical, and there are priorities that should be on the agenda, but aren't. Nothing new there, but we call this show "It's All Over, Full Stop." The sense we get is that unless things fundamentally change, well, we're going to hit the buffers.
Yeah, yeah, we are, and I think it ultimately comes down to it's just a really sad situation, because I think the thing that it comes down to for you and I, and is that it's about freedom. It's about living. It's about the most people living the life they want in the way that they choose. Now, there's always going to be limitations on that. People are never going to be able to get exactly what they want. But it's about having the freedom to do the basic things in life, to be able to build a secure retirement, to be able to have your own home, to own the roof over your own head, to be able to afford to have children and to raise them in the way that you feel is right, not in the way that's forced on you by the government's mismanagement and by the state. And it's about that, having that freedom to be able to just live the life the way you choose, the pursuit of happiness, to put it, to use an American term. But that isn't even on the ballot at all in our political system. And I think one of the really sad things is that I don't even really feel like it's on the television
Mm.
or the computer screen either, which is, I think, a bit disappointing.
Well, it shows you that the agenda of the main political parties, the uni party, as I call them, because they're close together as rather than far apart. They've got their own set of agendas that they're running with, but they're not actually aligned to the interests of ordinary Australians, ordinary households, ordinary small businesses. And we're getting further and further away from how things perhaps used to be, because I do think they were better years ago. But also, more importantly, the trajectory of travel suggests we're going to continue to actually make it harder for people to form a family, find somewhere to live, and have a life that makes much sense. Which basically comes back to, so what's the economy for? What is society for? Right? It's not just necessarily designed to allow politicians to get re-elected next time. There's a bit of a broader agenda here about the future of individuals and society, and the nature of that. That's not a discussion that we had through the election campaign at all. And even now, Chalmers is talking about productivity, et cetera, but there's not really this real conversation that we should be having. That's what the upcoming conference should be about. It's the fundamental DNA of society.
It is, and I think that this might annoy a few people, but that's nothing new for me, let's be honest. But I think that we need to get past this idea that voting for the Liberals or voting for whoever, voting for the Liberals would have made any difference.
No.
Like I remember people saying to me, at the 2019 election, well, if you vote for Labor, everything will be better. And then some people said to me at the 2022 election, sorry, the 2025 election, if you vote for the Liberals, things will be better. But the reality is that we get the same, more or less the same thing, regardless of who you elect. Now, don't get me wrong, there are differences. I'm not saying that they're completely the same. There are obviously significant differences. But when it comes to certain things, say like housing affordability, lockstep, and that's not just me saying that. That's literally, I have spoken to their officers. I've got the paperwork from Dutton's office. Albo's office wouldn't even respond to my request. So that's basically a tacit admission of what Claire O'Neill's already said. And there's not, and when it comes to, say, for example, the new the social media ban and the new age verification issues for search engines, they are an absolute lock step together. In fact, in some ways, the Liberals are pushing for even stronger legislation.
Mm.
And so really, if you had voted Team Blue instead of Team Red or Team Donkey, depending on which way you want to put it, you you would have got exactly the same thing when it comes to housing affordability, and you would have got exactly the same thing when it comes to the loss of civil liberties, just in a slightly different way.
Mhm. Absolutely. Well, Tarek, you also were kind enough to put some slides together, and I think we should probably switch the conversation forward to look at the slides because we could spend the rest of this bemoaning the the disaster area that Australia is in many ways. There are some lovely things about Australia, but also some concerning things. But let's home in on those slides and have a little look. And I have to say, this is quite a good way into it.
Yeah, I thought I'd inject a little bit of self-determination and optimism into the start of the slides because, well, the rest of it's less optimistic. So I just thought I'd balance it out. And as usual, the charts will be available at burneteconomics.com, and all subscribers are very much appreciated, and contributions are very welcome. So we shall get straight into it. Now, I was playing with the ABS labor account data earlier today for an upcoming article, and I got curious. I thought, well, healthcare and social assistance has seen this explosive rise in the number of hours worked. How does that compare with the rest of the economy? So I put together all the different industries, mining, manufacturing, you name it, wholesale, retail, and then I went, well, this is bigger than any of the market sectors of the economy. And then I got thinking, what if I used the whole market economy? So I did. And what I found was that the growth in the number of hours worked in healthcare and social assistance since the election of the Albanese government, or well, more accurately, since the end of the second quarter of 2022, has that healthcare and social assistance has grown more than the entirety of the market economy, which is every single other industry, with the exception of naturally healthcare and social assistance, education, and government. And that is honestly probably one of the most astounding things I've seen in recent months.
Well, that's a bombshell, isn't it? But well, I mean, it's in one level, it's not a surprise because all of the government money that's been thrown in to the government-funded jobs directly or indirectly, and the rise in the NDIS. So there were some clues, but what that suggests is that without that injection, the economy would have been in a very different place.
Definitely, and I think one of the things as well that I find concerning, if you look at that spike there in Q3 of 2023, we have added almost in the scope of this data, which is up until the end of the first quarter of this year, between Q3 2023 and the end of Q1 2025, we added almost 900,000 people to our population. Yet there are fewer hours worked in the market sector today than there was back then. Now, that to me is an astounding fact that we could add 900,000 people, but we haven't added a single shelf stacker, a single plumber, a single, you name it, in terms of we haven't added a single hour for them in net terms across the economy, despite adding 900,000 people. So what does that mean? That means that we're seeing services deteriorate because we're adding all this extra demand, but we're not adding supply, at least in terms of actual hours worked facing the public.
Well, maybe it's all AI. Maybe the AI is,
Uh,
allowing a lot of the work. Oh no! Oh, just a thought.
yeah, well, I mean, Grok isn't exactly out at Safeway. Oh, sorry, Woolworths stacking shelves. Not just yet, anyway.
Exactly. That's amazing.
All right. Well, we'll move on to the next one. This is what I was referring to from Combank IQ, and basically what I've done is I've taken all consumer spending across the economy and then basically divvied it up by the size, divvied it up by age demographic. And red denotes the fact that the level of per capita spending is falling over the last 12 months, and green denotes it growing. But I think this chart really reveals something very concerning. The fact that those few green slivers at the end of the chart which make up something like less than a quarter of the population, are the sole remaining domestic growth engine of consumer spending. And the rest of it is basically just population growth from people from teenagers getting older going out into the world, which is a huge factor in the grand scheme of things, and migration. And that's it. That's all that's the narrow rickety base sitting at the end of the sitting underneath the consumer economy. And if it falters, it's kaput. And to be completely honest with you, considering what the latest labor force data looks like, it's looking like the government side of things supporting the economy may be, sort of pulling a bit of its support from underneath the economy as well. And if that happens, well, it's toast, put simply.
Yeah, absolutely. And I don't know whether you've got another chart later, but I might just share one chart that I've got here, which relates to the unemployment rate for different cohorts. And the reason this is important and perhaps quite relevant here is because if you look at the unemployment in the labor force for 25 years and over, it's at 3.3. But if you look at the 15 to 24-year-olds, it's above 10% and rising. And that's another factor in all of this, which I think is quite important. So the distribution of activity, unemployment, and unemployment, those things, it's all playing into the same trend. So a lot of younger people are not actually getting the momentum, particularly when they're younger, and that then follows through right the way, right the through. So we talked about household formation being later, and their ability to spend is absolutely crimped. So we've got this smaller and smaller and smaller island of people who are basically still spending and supporting the economy. Now, two observations. The first relates to the fact that group, the 65 plus and 75 plus, mostly on pensions, presumably, will be holding the bulk of the equity in property, and of course, will have some investment income and those sorts of things. But the question is that really a sustainable basis to build an economy into the future?
No, no, exactly. And it's not a sustainable base to build a society into the future either. Because the thing is, because of the way the Australian system is geared, because of the way it functions, these people, the next cohort of retirees are going to have even more time with compulsory super, and they're going to have and because of the fact that basically the housing money printer, the housing price printer, I should say, just keeps going. If the next 5 years is similar to the last 5 years, or even to the prior 5 years prior to that, you're looking at a situation where basically the only people getting ahead at an aggregate level are going to be the people who are in the retiree cohort. Or if we see a bit more of a broadening, I would say more likely at an aggregate level because of the flow of inheritances, probably the 50 and over
Yep.
cohort.
Yep.
So it's not something that you can sustainably build a society on because you're going to have these young people going out to work, doing the hard slog to pay the rent, pay the mortgage, and the people who are going to be having all the leisure, all the people out there in the cafes, out there on holiday doing all the things is going to just be increasingly disproportionately older people. Now, you don't begrudge the people that at an individual level. Most people worked hard for what they have, but at a societal level, a lot of people are going to get really, really pissed off that they're paying, in particular the people who are paying for these pensions and paying for these things, when the people are living in houses that they could for the average person that they could never possibly hope to own. So it's going to be a very challenging social issue, I think, going forward.
Absolutely. And of course, that also explains why it is that Chalmers is now talking about taxing superannuation over 3 million. And, there's going to be a broader conversation about wealth taxes, et cetera, because basically, the ability to be able to fund well, the excessive government spending, I would argue, in the wrong priorities, it is going to be shot unless they can find new sources of income and assets and growth in assets. Well, it's such a large pool, the 4 trillion in superannuation, the 11 trillion sitting in property values, of which a lot of is available at the top end there, in terms of the age groups, suggests you can understand why they're doing it. But again, is it actually sensible?
I'm going to make a prediction right here, right now, and people can call me on this. Give it a decade. The government, whether it's blue or whether it's red, are going to come for the equity that particularly property investors have in their properties, and because that's low hanging fruit. Now, for the longest time, that particular cohort at the ballot box has had power, and the government has had significant enough inflows from elsewhere to be able to subsist and to grow the size of government on those other revenue sources. But a day is coming, and that day isn't that far away, where they're gonna look for the low hanging fruit, where they're gonna look for those savings, and they're gonna say, well, we can't afford this anymore. Someone's going to have to pay. And you know what? You guys aren't that popular in the grand scheme of things with the electorate. So we're going to take it from you. And well, that's just going to be the way the cookie crumbles. I mean, to be completely honest with you, the smartest thing the property investor class can do now is propose cutting the concessions now. Take the hit, take the hit, take it, cop it on the chin right now. Be the first cab off the rank. Take whatever relatively mild to medium hit you can, and cop it on the chin now, rather than waiting until later when the government's desperate for coin, and then they're not gonna be anywhere near as kind.
No, I think you're right. And of course, there's a similar discussion going on in the UK at the moment, specifically about assets and asset.
Bingo.
Yeah. And of course, the thing that the UK has, which Australia doesn't have at the moment, is the death tax. Basically, in the UK, above a certain amount, the state takes a third, or sometimes even more. Um, Interesting question whether in fact that will ever come to Australia too, because again, the intergenerational issues here are so huge, and the credit card that the government is living off continues to actually get more and more overdrawn. So there are wall-to-wall deficits. The ABC leak this week showed that Treasury knows Treasury knows what the story is, right? And of course, they knew before the election what the story was, but nobody wanted to talk about it. So we're on an unsustainable path with debt continuing to bubble higher, and the government desperate to find alternatives. So yeah, I think you're absolutely right, and I think that the superannuation, the 3 million threshold, is a sort of the first step forward, but the switch to calculating unrealized gains and then taxing them, which is what this represents, that's a huge Rubicon, which they'll never get back across again.
No, no, and I think as well, considering the if you put that into perspective, like the taxing on of unrealized gains right now, taxing unrealized gains on shares and other more volatile assets is highly problematic, because you can have a situation, which is not unprecedented, where the share market, in terms of the actual underlying value of a portfolio, goes nowhere for the best part of 20 years. I mean, that's what happened with the ASX for almost 2 decades following the global financial crisis. But when you're talking about property, and of course the Australian perception is property always goes up, well, it just becomes that much more attractive to tax, doesn't it?
Mm.
It's just also clear, because they can't keep growing government the way they are. I mean, like, look at the UK. I think the UK is a perfect example of the road that we're going down. Enormous levels of non-market jobs, enormous level of government driving the economy, but now they're hitting a wall. And if you look at the relative size of government in terms of non-market jobs and compare it with Australia, we're not that far away from where they were prior to the pandemic. So we're catching up.
Mm.
And I think we know that that doesn't end very well. And I think we're just lucky that we've got this big resources economy that keeps injecting cash into the federal and state treasuries. Because if we didn't have that, I think we'd be a lot closer to Britain already.
Yeah, well, obviously the resources sector, as long as China goes on buying stuff, is a bit of a support. Interesting question about that. But I just want on the unrealized, just one little observation. Of course, there's a little trick, right? So effectively, they calculate what the growth has been, and then will charge you for it, which means you need to have free cash available to pay for that. And if your assets are illiquid, like in property, that might be a problem because you might have to sell the property to be able to pay the tax, right? But the other is that if in fact it then subsequently goes down again, you don't get a credit back. What you do is you have to hold the unrealized loss effectively in Netherland until you get subsequent gains later to offset them, because that's the way the tax system works. So it's an asymmetric story as well. And I don't think people have got their head around this. So for all sorts of reasons, the unrealized gains story and the implications on all sorts of asset classes are very significant. On the final point, just you mentioned the stock market. Of course, the stock market went up and down, up and down, up and down. It wasn't a sort of a smooth linear up and down once. So through the years, there would have been unrealized gains and losses, gains and losses, gains and losses. So that this would make the whole tax management process from a government perspective and also from an individual perspective even more complex. So there's a degree of complexity in there as well, which again, I don't think people have appreciated.
No, I mean it is basically a wealth tax.
Mm.
I mean, let's be honest, it's just a very specific avenue of a wealth tax. But I mean, I don't think at the core in terms of look, I mean, I don't think that superannuation should be concessional at that level.
Mm.
But I
I
don't think they
agree.
should be using unrealized gains as the means
No,
to which that.
change the tax break so that they're less generous or something like that. That's transparent, but effectively bringing in something subsequent and then effectively making it into this wobbly, well, unrealized, and how are you going to pay for it? I mean, there's a bunch of implications and consequences, but I think we can both, take to the bank literally the idea that they're going after wealth because that's the only thing they've got.
Well, I think the thing is that if you look at Australia, our economy in terms of what's actually driven growth outside of the big burst during COVID, which was, let's be honest, just driven by unprecedented conditions, there's not really a whole lot left. I mean, China is not going to keep, growing meteorically the way that it used to. I mean, yeah, okay, it may grow meteorically, but it's not going to grow in the same way. And that's not good for us. And India is not going to grow in the same way that China did either. So we're left with a very, very challenging situation that the next 20 years are not going to be like the last 20. So that leaves us in a very, very challenging position of what exactly is going to power our economy going forward. And I don't think anyone, at least in government, has an answer to that is in any way, shall we put it, desirable.
No, exactly right. Well, productivity, of course, will solve the problem. We'll suddenly find this magic productivity silver bullet, right? Which means that suddenly we'll turn around the last 30 years of failing productivity, and that will solve everything. I've just seen a big pig fly past the window, by the way.
Well, to be completely fair, there is a way to improve productivity.
Get rid of
Um,
government.
re- re-
Oh,
well, that might help, but no, I was thinking more along the lines. If you actually look at the chart of productivity for Australia during COVID, it skyrocketed because you saw so many workers who were working generally lower wage, lower productivity jobs leave. So, I mean, if we then took the migration system, reduced migration dramatically, and focused it on skilled people, we basically took the Singapore approach, for example. You take, to skilled migrants, you get the people who are on two and a half times the median salary for a job, people who are very much 100% skilled. I mean, if you're paying someone two and a half times the median salary for that particular occupation, then obviously that person is high value. So there's that particular avenue, and then you focus on the actual trade, tradesmen, nurses, doctors that you actually need. Wow, I mean, you could boost productivity overnight because you're bringing in high value people who are more productive than the average, and you're bringing in other people who are going to help build the infrastructure, build the houses, keep the people healthy, do all the things you need to do to keep a society productive. And hey, presto, you've got rising productivity. But the problem, on the other hand, is that that doesn't necessarily help to grow headline GDP, and we might have a recession. And well, governments don't like recessions.
No, they don't. Oh no, Treasury, of course, absolutely anchored to the big Australia. Bring everybody in. The more, the merrier. Come on, we've got plenty of room.
Yeah, bigger Australia, bigger government. That's the strategy.
Exactly.
That should be the title of our next video, actually. That's a good one.
Done.
Alrighty. Now, a lot of people have made the case, well, wrongly made the case, let me put it that way, that you can't cut migration dramatically in Australia. Well, Canada did.
Mm.
Canada's got a Westminster system. Canada is an Anglosphere country. You know, they are one of the closest cousins to Australia, maybe a brother or sister, depending on how you want to approach it. But I think this just goes to show of how easily migration could be cut, and you could still retain the intake, targeting the people, you know, the doctors, the nurses that you actually need. Because what this shows is that the growth in the number of temporary migrants has reversed. Temporary migrants are leaving Canada now in net terms. They have been now for the last 2 quarters, but the permanent intake has been maintained. Now, I think the permanent intake into Canada is still very poorly targeted, but it just goes to show that it is conceptually possible, and that we could do the exact same thing. And we've got an even larger temporary migrant population to run down for years and years and years and years in net terms to run down, and still be able to have migration of the people that we actually genuinely need. But this is Australia after all.
And it's interesting just to refer to New Zealand, right? Because New Zealand dialed down migration considerably as well. And interestingly, you may have charts on this later, but if you look at the cost of property and the cost of rents, there's a direct correlation between what happens to migration and property costs and rental costs.
Yeah, I mean, the thing is, if like I was playing with it the other day, if you actually chart quarterly Canadian migration against rolling 6 month property prices, so you're giving it a little bit of lead time to be able to see the effect.
Mm.
It's 1 for 1.
Yep.
All of a sudden, property goes from bouncing back hard to tanking hard, and it just goes to show that there are answers to the housing affordability question. They're just not politically desirable ones.
Yeah. Well, it's New Zealand's demonstrating again. They dialed back the migration. They made some adjustments to the lending criteria to focus more on first-time buyers rather than investors, and a few other things too. And property prices in New Zealand are still, drifting down. And like I said, interest rates are a lot lower than they were in New Zealand. There are answers to these questions, but your point is, are they politically acceptable answers? And that's the problem.
I think one of the interesting things is that I think at an aggregate level, at an electorate level, I think they are acceptable answers. I don't think that the average person in the street is going to care about lowering the number of temporary migrants, getting, basically repeating Canada's experience, but focusing even more on getting the migrants that we actually need. I don't think that's a really controversial issue in the grand scheme of things. And I think you get some sort of pushback from people ideologically aligned to open borders and that sort of thing. But at the end of the day, I don't think it's something that's really a deal breaker for people at the ballot box. And I don't think housing affordability is really a deal breaker at the ballot box either.
Mm.
Because, well, I mean, we'll see at the next Kiwi election whether it is or not. But realistically, I don't think it's going to be a major factor.
Yeah, it'll be interesting to see, won't it? But the Canada story is really interesting. And as I say, there's a direct correlation between migration going down and rentals going down. So there you go. That's a interesting.
Well, they're probably, considering the fact that Carney got re-elected and his team are some of the biggest big Canada, shall we say, proponents. I think that we're going to see what's going to happen when that reverses
Yes.
over the next parliamentary term, at some point over the next parliamentary term.
I think it's quite likely. Although interesting, Khan is also, of course, meant to be green as well. So it's a very interesting contention, which just to add a little bit extra spice.
It's going to be interesting. Let's put it that way. Now, this is a really interesting one because I got to thinking the other day, do mortgage rate cycles, how do they hit differently based on where rates are at? Now, what I found was that for each percentage point, there was a reduction in mortgage costs. It didn't necessarily relate to us to the same amount of reduction in actual mortgage repayments overall, because obviously there's the principal repayments. So what this means is that rate cut cycles were much, much more effective back in the day when interest payments were a much larger component of mortgage repayments than now, whereas the average the principal repayments are a much larger element. So I thought that was quite interesting.
And that's a really important observation, right? Because there's two functions here. First is the size of the mortgage counts, as well as the interest rate. And then the interest rate is also important. And of course, with very high rates, then you have to pay back more in terms of interest. But as rates come down, it becomes more and more a function of how much you're having to repay on the mortgage. Now, that's driven by the term of the mortgage. And as I said earlier on, banks are extending terms left, right, and centre to try and help people. But there's also a basic maths issue that, a 1% up isn't a 1% down as well.
Exactly. And I think there's also another interesting aspect to this too, which is there's the other, because Australian household savings have risen so much in aggregate since the pandemic, rate cuts are now also damaging flows to household. At last time I checked, the total level of flows to households from savings and from other forms of uh, what would you call them? Coupon payments, I suppose you could call them. On people,
Mm.
technically speaking, there's the household holdings of government bonds, but basically, that now represents the equivalent of about 8% of employee earnings at a national level, up from about less than 3 prior to the pandemic. So the problem is that while rate cuts are helping households who have mortgages, it's hitting households who have savings. And because savings rates are lower generally than mortgage rates, the proportional hit on a one-to-one basis is larger. So what we're actually seeing is households in aggregate potentially seeing a rather substantial hit from rate cuts to their bottom lines. Now, one of the things I think is interesting is this is something that CBA got peripherally into recently. And they basically said that about 80% of their customers are not pocketing the rate cuts. They're just paying the same repayments as they did previously. So they're getting ahead on their loans, which, don't get me wrong, is great. But that is cash isn't being spent into the economy. Now, let's say that maybe an extra 30% of people do start spending their rate cut windfall as things get a little bit more stable, as rates are cut a bit more. That, in net terms, is going to create a situation where households are getting less cash because of the impact on savings rates than they were prior to the rate cuts. So rate cuts at a purely mechanical cash flow level could be a negative for households if they're not actually going to pocket the extra money and are just going to use it to pay down their mortgage faster.
Yeah, and another point just to emphasize that those top three cohorts that we looked at in the first slide, they're the ones with the large savings. They're the ones with the largest proportion of income coming from stocks or deposit accounts, etc., etc. So as rates go down, their capacity to overspend gets crimped.
Yeah. So we better damn well hope that rate cuts fire these other age demographics, otherwise we're basically stuffed.
Exactly right. Yep. Yep.
Oh lordy. Now, this is a chart of real wages since the inception of the ABS wage price index. And what I've done here is I've taken the very bottom of wages growth and then I've projected that into the future on just a basic, very basic linear trend. And it's still going to be the very nearly the mid 2030s, assuming that the current trend continues before we get back to where we were prior to the pandemic. And it is, however, worth noting that this particular trend is being distorted by both the outsized increase to Commonwealth rent assistance and also the Albanese government's and the various state governments' electricity subsidies. If you take those two out of the equation, real wages would look significantly less healthy and the trend would look significantly worse. But I just think it just goes to show how long it's going to take for us to get back to where we were. Yet, if you look at, say, a chart of US real wages, they're already well ahead of where they were prior to the pandemic. We are uniquely crap when it comes to uh, the performance of this metric for households, despite the fact that everyone just talks about how wonderful the Australian economy is compared with all these other awful, awful countries.
Oh, absolutely. And it's just worth underscoring, we're talking the real wages. So this is inflation adjusted wages, right? It's very important
Yeah.
for you to understand that because, of course, inflation is a lot higher now than it was previously. But what that tells you is, and this is why most people are saying, I don't feel very wealthy these days. Well, that's why, because in real terms, your wages have gone backwards, considerably backwards. And very importantly, the prospect of getting back to anything like where you were and I suppose you could argue that the COVID peak was artificial, but even if you don't ignore that, it's years and years and years before we get back anything close. So, in real terms, people have less money to spend than they've had for the last 20 years or so, and will have ahead. So, yeah, the next generation are not going to be able to spend as much as the last generation, is what I would take from that.
Yeah, exactly right. And I mean, and the projection here, this is only to get to Q4 2019 levels. To get to the artificial COVID peak, that you're looking at probably mid to late 2030s, which is
Yep.
just wild stuff. And I think this is another just part of the problem too, is that if this is correct, and to be honest, I think this is probably a little bit optimistic considering the state of things at the moment um, in terms of the long term, in terms of the sort of broader long term average rate of growth. This is going to leave the wage earning elements of the economy in a challenging spot in terms of being able to actually power the consumer economy, which leaves us further reliant on the elements of the economy, the older demographics, the recipients of inheritance who aren't relying on wages, who are instead gaining income or a one-off lump sum from sources external to employment, which is just a very concerning set of circumstances to be reliant upon.
And just one other little point, of course, this shows through the projection that the rate of wages growth is still higher than inflation. But of course, the inflationary pressures could well be a little stronger thanks to things like the trade disruptions and those sorts of things, and a few other factors too. So, if inflation bites harder than people think, then it gets even harder to get to any real wages growth at all.
Indeed, and this is something that the RBA has noted in their forecast. They
Yep.
believe that there will be points over the next 12 to 18 months when these subsidies come off, if they come off, let's be honest. But if they were to come off, then you would see there would be quarters or even half years where real wages would be falling.
Mm,
So
absolutely.
there will be setback. There is the expectation from the RBA that there will be those setbacks. And just on the inflation front, UK inflation's reaccelerated, US inflation's reaccelerated. The question is are we going to be lucky enough for ours to, not unlucky enough, I should say, for ours to reaccelerate? So, although to be completely fair, one of the reasons why theirs is reaccelerating is because they still have relatively strong wages growth, which compared we do compared with what is normal for us, what was normal pre-pandemic. But in relative terms, in terms of our wages growth compared with the UK or the US, ours is crap.
Mm. Well, I suspect we're going to see further government handouts to the rental sector and other sectors to try and keep the inflation down. I was quite amused. I don't know whether you picked this up, but if you think Chalmers moved heaven and earth to try and persuade the RBA to cut rates, last week. We had the electricity subsidies, we had the rental subsidies, we had all the moral pressure, et cetera, et cetera, et cetera. They even decided to create a separate board for decision making. They stacked the board with people who were meant to be more Labour focused and aligned, and the RBA still didn't cut rates.
I don't. The thing is looking at their mandate. They don't have one to really cut. Okay,
No.
maybe after the recent unemployment figures they do, but the problem is that under more normal circumstances, I think the RBA would have been cutting. Don't get me wrong.
Mm.
If you take the government intervention out of the equation, I reckon that we would have been seeing rate cuts way back in 2020, probably early to mid 2024, maybe a little bit later if things had taken a while to feed through. Because put simply, without the government pumping all this extra cash and employment into the economy, there wouldn't have been all this inflation. It would have died off long ago.
Yeah.
I mean, which is pretty much what's happened in a lot of other places. But that's just not the way the cookies crumbled. And I think the thing is that because the RBA doesn't know what the government or government in general is going to do in terms of are they gonna print another 200,000 jobs? Are they gonna is the size of government relative to GDP going to get even bigger again? I mean, a lot of people have talked about the success of the RBA during this economic cycle, that inflation has come down despite the fact that we haven't seen a huge rise in unemployment. But the simple fact is the reason why inflation has come down significantly is because wages have been suppressed, and one of the reasons why the unemployment rate hasn't risen is because the government has been supporting employment. So I don't really think that the so-called success story has much to do with the RBA at all. It's just a very lucky set of circumstances that have played out. And to be completely honest with you, I don't really, considering the way things have played out in terms of living standards, in terms of real wages, I've got to tell you, Martin, I'm not really feeling all that lucky compared with Americans who got whacked with higher rates and didn't have all that extra support, who have their real wages higher than the pandemic, and we're sitting here waiting until mid 2030s.
Absolutely. Well, the question is migration effectively inflation? And I think the answer is probably yes. It does put more demand into the economy. It actually lifts rents. It lifts house prices, all of those things. That's part of it. And, the lucky country that Australia was, well, that's been badly diluted.
Well, the key, Martin, is just not to count those things to the degree that they should be.
Of course, that's the way to do it, isn't it?
And then if you don't count it, and then if somehow the data quality issues for the other data that will actually reveal the issues with your data don't count it until 2027, well, I mean, that just coincidentally fixes all sorts of problems, doesn't it?
Which is where we came into this discussion. Funnily enough, it's all about the data and not having a good compass. Convenient. Convenient.
Exactly. I thought it would be interesting to get into a little bit of China, because there's Robert Rennie over at Westpac has put together some very, very interesting numbers. Now, on your right there, the graph there on the far right, it shows Chinese iron ore imports, and they have surged. Unfortunately, the chart's mislabeled. That should read 2025, but they have surged to above one standard deviation above the average. Yet, at the same time, steel production in China has crashed to its lowest, to what Robert Rennie at Westpac, and Robert Rennie is very, very good on this sort of stuff. He predicts that Chinese steel production for Q2 2025 has crashed to its lowest level since 2018. So China is stockpiling a vast, vast amount of iron ore. Now, just doing an eyeball estimate, on the level of imports versus the level of, excuse me, the level of steel production, we are potentially looking at a level of stockpiling that is basically akin to an entire year worth of US iron ore consumption during World War II. It's big. I don't know why they're doing it. There's a lot of speculation as to the why, but I think it's a pretty big news story, to be completely honest with you.
Yeah, it's very interesting. And if they are hoarding iron ore, um, I wonder whether that is for later. Maybe they won't need to have so much imports later, possibly. The latest China trade data, of course, showed that whilst the US trade was down, they'd actually increased their trade to other centers, particularly perhaps speculation is that they're actually transshipping to other regional centers and then they're going to the US and then getting around some of the the tariff discussions. I mean that may or may not be part of the story, but there's a fascinating story here, and I might just link it with a piece of data that I've got, Tarek, because this was actually quite fascinating to me. Was that the global money? If you look at global money, it's fascinating how China has made a huge contribution to global money recently. So this basically just shows you the China M1, the US M1, and then the G10, and the total global money supply, which has gone through the roof. A lot of it's actually to do with what China's been doing. So it's part of this global asset bubble, chasing, of course, higher prices, etc., etc. So it's fascinating to see how all of this is cohering around what China's doing.
Yeah, and just this is something that I think will please some of the viewers, but I would say that the China M1 liquidity story is a huge factor driving the price of gold and the price of Bitcoin.
Yep, absolutely. I was going to make exactly that same point. If you want to understand what's going on, that liquidity story is the key to get your head around. And it also suggests that even if the US were to dial back their debt, which they probably won't do, um, it's still going to grow because of what China's up to.
Yeah, and the thing is that China's rolling over debts. China's growing their debt at an absolutely stratospheric rate,
Hmm.
and that's not going to stop. And part of the problem as well for them is that, well, I guess it depends on how you approach the issue, but they're rolling over a lot of hidden debt onto government balance sheets.
Yes.
Now, there is, to be completely fair, there is some benefits to that. There's the benefit of the fact that because they're taking it from local government financing vehicles and then putting it onto the government balance sheet, right now Chinese yields are depressed as hell. A Chinese local government can borrow for 10, 20, 30 years at less than, in some cases, at less than 2%. So they're refinancing debt that was at 4, 5, 6% down to, in some cases, 2, 1.8, 1.9, according to some of the data from the Chinese Ministry of Finance. So that will be beneficial on one hand. They've got that short-term sugar hit because we don't have to pay all this money on debt servicing anymore. Say we had this $100 billion bond, we've halved our debt servicing costs. But that's a limited time only thing. And it also means that the debt's not hidden anymore. People know about it. People and in time there that will be priced in to some degree, and that is going to cause problems. I think that's a very, very long term story, considering the way that the Chinese financial system is closed. It's very, very different to the way it works in the West, but they are burning scope to keep the plates spinning
Mm,
to do by doing what they're doing.
absolutely. Yeah.
Okay, now I think we've got two more charts to go. This one is of China's prime consumer age demographics, so people aged 25 to 54. And basically, in 2025, it's going to contract by about 10 million people.
Mhm.
And this is why I think that there's two big takeaways from this one. One, China's consumer base is basically in terminal decline. So that is going to be a major, major headwind for Chinese things like Chinese retail sales growth and all those sorts of things going forward. However, I think it also means that Chinese data needs to be assessed through a very different lens. It's all well and good to say, oh, well, Chinese retail sales have underperformed, blah, blah, blah. But when you put Chinese retail sales into per capita terms, and the population is declining so dramatically, that's particularly the prime consumer age demographic, if you put it into those per capita terms, it actually looks very, very good. And I think that that's something that really just needs to be factored into considerations about China going forward. Just the fact that China could do very, very, very well at a per capita basis. They could easily grow their retail spending in real terms by 2, 3, 4%. But because of the contraction in the size of their consumer populace, sorry, grow their retail sales in per capita terms by that level. But because of the decline in their size of their consumer base, it makes things look a lot worse than they actually are. And that, I think, is going to be the focus of the Chinese government. Yes, they want economic growth. Yes, they want the top line. But what they really, really want is for the average person in the street to do well, because that is ultimately what matters to the stability of China as an economy and China as a nation.
Yeah, I had a couple of wicked thoughts as you were talking there. One, of course, is well, the solution, look at Australia, is just ramp up migration. That'll solve your population problem, won't it? Because the household formation in Australia is predominantly now migration driven rather than local birth driven. But the other is the strong initiative from China over the last few years to drive household consumption higher is working. It is working,
Yeah,
and it's working quite interestingly. And so they're able to sell more of their goods, locally into China, and that the overall level of prosperity in China is actually on a per capita basis still growing.
exactly. I think the problem for China is that they've overcapitalized.
Mm,
They've overcapitalized on property in a massive way. One of the former National Bureau of Statistics deputy heads came out, I think it was last year, and said basically we could pretty much house the entire population of China over again. There's that much empty space.
yeah,
So there's that part. There's that aspect. But on the other hand, they just don't have the capacity in their consumer base to be able to consume the amount of goods that they've committed to manufacturing through this enormous growth and through these enormous subsidies to the manufacturing sector. And that is, I think, going to be a big, big story going forward. I think that Trump may have fired the first shots of the latest round of trade wars, but the most bitterly contested ones are going to be the ones with China.
yes,
Because it's all well and good that you've got to pay a bit of extra, that maybe the company that's exporting into the US has to take a bit of a hit, or the consumers need to pay a little bit more in the US. But when it's local jobs on the line, and when it's Chinese goods treading on the toes of local manufacturing, that is going to be the really bitterly contested ones. And I think that China is going to be just as aggressive and perhaps even more so as Trump in pursuing this, because they need to export that capacity. They need to make good on those investments they've made in their manufacturing capacity. But by the same token, all these countries, the Chilean steel industry, the French car industry, you know, the German, the German appliance industry, pick one, they all will need to defend their domestic economies and their domestic employment markets against Chinese goods. Otherwise, they risk losing them forever, and that is going to be the story. Everyone can talk crap about Trump and, oh, we're going to align with China. No, you're not. I mean, you can, but it would be the dumbest thing you'll ever do, and it'll be one of the last things you ever do to your industrial economy, because after they're finished, there won't be anything left.
absolutely. No, I think that's exactly right. And I do think that the secondary tariff story, which is effectively Trump saying, well, for countries that actually, are trading with China, I might actually take that into account when I think about what you're doing. So there's a bunch of levers around this trade discussion which have yet to be played out. And I think those consequences could be quite significant. But on the other hand, then if China is saying, well, we give us access to chips and we might do some, there's a long path to go. So the idea of it all being settled on August the 1st is nonsensical. It ain't going to get fixed then.
No, I completely agree. I mean, this is just the beginning of the story.
Yeah.
This isn't, to paraphrase Winston Churchill, this isn't even, this isn't the beginning of the end. It's not even the end of the beginning.
Exactly right. So, and that, of course, then puts more pressure on the Fed Reserve saying, well, we're not sure what's going to happen. So we're just going to sit on our hands and see what happens. So, and Trump's now said, well, I'm not going to sack Powell, at least initially. I guess he put the flag up the flagpole this week, and the market said, don't you dare, and took the flag down again.
Well, let's be honest, the market's all that matters to him at this point, and on that particular issue.
Spot on.
Okay, last chart of the day. Now, This is something I was referring to previously. This is the chart of UK non-market employment versus Australian non-market employment. Now, there's a number of different ways to look at this, but I chose this way because I thought it was the most fair. Australian non-market employment is still below where it is in the UK. It's about similar to where the UK was prior to the pandemic. But Australia's non-market employment has risen from a much lower base. If you purely look at the growth in non-market employment from, say, the GFC, Australia's growth has been more than double the relative growth of the UK. So while the UK is in a much worse spot than us in aggregate, in terms of the level of deterioration that has been seen in Australia, I should say, Australia takes the cake, and it takes the cake in a rather substantial way. It's also the fact that if you look at the trajectory of the UK, it was flat for a relatively long time following the era of austerity, whereas in Australia, the trend has not been anything but up since the financial crisis.
Yeah, and it would be very interesting to just mark on the chart there when NDIS started and what proportion of the non-market jobs is NDIS specific, because I think that's a very large element in the total picture. It's not the total picture, but it's a very large element in the total picture in Australia.
Oh, definitely. And I think the problem is it's a challenging thing to quantify because one, they don't really make a big song and dance about the NDIS jobs in actual data. You get the big thing from Short and say, it's now employing 500,000 people. Aren't we fantastic? And no, it's not. But yeah, no, it is something that I would like to look into because part of the problem is that it's very difficult to strip out the impact of the shift from state-based services and the changeover to federal services. If someone has any insight on this or any data, please let us know in the comments below because I think Martin and I would both like to very much look into that.
Yeah, and I'll just add one other point. The other interesting thing and what's been driving a lot of the activity in the UK, the greater proportion of young people who are now on special programs and need special help. It's about 15% of youngsters in the UK are now needing specific help. That's much higher than it used to be. Now, whether that's a change in the definition of normal, whether it's a rise in some of these other mental problems which are now being recognised more early, I don't know. But I also wonder whether that's another factor too, that there's something else going on. Are more younger people dealing with more issues than they used to, both physical and mental issues? And is that part of the story here too? Or are we now being more responsive and therefore throwing more resources at it? I don't know. But there's a whole bunch of questions below this sort of picture, which is really, really important to try and understand. Because I'm of always the belief that we should be providing a level of support for people who really need it. But then the question is the level of support appropriate? And also, are all the people who need it getting it, but are also people who don't need it getting it? And I think that's part of a much bigger story.
Well, I'm guessing that you've heard of the the government programs in the UK that are now accounting for up to 40% of car sales in some regions, where
Yes.
basically someone ends up being having one affliction or another, whether it be physical or mental, and the government basically gets you a new car, a nice one too. I mean, I've Beamers, Mercs, real nice stuff going out there. But and in some parts of the UK, in some regions, it's now 40% of car sales.
Yep.
So you see some of these public housing estates, and it's just like, you know, Beamer, Merc, Beamer, nice new rent, some nice, real nice wheels, and it's all on the taxpayer dime. I mean,
Yep.
it's helping the UK car industry, I guess, but well, the dealers anyway. But it's just an astounding waste of money. I mean, look, I understand that there are people with specific needs for transportation who are disabled, and yeah, definitely. I mean, obviously, if you're in a wheelchair, you need a very very specific type of vehicle. But I mean, there's been some stories where it's like, oh, this person's bipolar and they've got a vehicle, and it's like, well, all right. I mean, and it's just a bit ridiculous. But I mean, to be completely fair to the Brits, it's not like I haven't heard similarly ridiculous things from NDIS providers. To be
Mm.
completely fair.
No. And of course, we know the NDIS system is rife with people perhaps making money on the way through, providing services and charging the government and all those things. There's a bunch of issues there. I guess my point is, to what should we attribute a change of policy? What should we attribute a change in our mental health and those sorts of things, and how do you square that circle? That's the sort of analysis which should be being done but isn't being done, and we're just getting these simplistic, oh, it's all way too high, I've got to cut it, or oh no, we've got to spend more because that's, we need more specific analysis on these sorts of things and to try and understand what's going on, which comes right back to what we said at the start. The data, and getting the right data and the right lenses to understand what's really going on is a really important part of making good policy decisions. And unfortunately, at the moment, I think we're getting very bad policy decisions. So the bottom line as we come to the end of the show, Tarric, is that so many of the immutables that we had for a generation or few are just disappearing. And what we're seeing is a society that's actually fragmented. We see a political class that's disconnected. And frankly, we see a lot of the public discourse being probably fooled by poor data and not really wanting to enter into the sorts of discussions that we have on this channel, and you have on Burnout Economics. And of course, now you're also directly connected to Macrobusiness too, which is great because Macrobusiness is another source of truth. So, hopefully we will continue to spread the truth word, because there's a lot we need to explore.
Oh, there definitely is, mate. And there's never going to be any shortage of content in that regard. And it's something that I'm just on a personal note, that I'm really looking forward to sharing with all the viewers going forward. And I'll no doubt be sharing plenty of the upcoming macro business and burnout economics articles on my Twitter. So if you follow me there, you know you'll probably see most of them.
Well, excellent, Tarek. Well, thank you very much for that, and I'll look forward to having you back on when you can make it. I've got Leith actually on next Tuesday on the live show. So at some point, you might even want to consider coming on and making a live show of it as well. We're very, very happy to do that anytime as well. Thank you, Tarek. Have a great weekend, and appreciate your insights as always. Very important conversation today.
Thanks, mate, and you have a good weekend too, and to all the viewers.
Take care. Bye-bye.
Bye, mate.